Big news coming out of the Fed yesterday. Let's go ahead and put this up on the screen here. So the Fed approved a 75 basis point increase. Again, 75 basis points. That just means 0.75%. For some reason, they like to say it that way. On Wednesday, that is the largest rate rise since 1994. All officials at that meeting projected rates rising to 3%. And I do think we should reflect for a moment on how much the Fed has moved in terms of the lengths they are willing to go to tighten the economy. When you say tighten the economy, I mean, that means taking money out of your bank account. I mean, that's what they're trying to do here, and very, very likely to trigger a recession at this point because what they have done so far hasn't worked. I mean, we just got this extraordinary inflation report last week that led them to move from increasing 50 basis points to 75 basis points. Some analysts were even saying we might get 100 basis points. It looks very likely that we'll be at 0.75 for the next meeting as well. And that's a very different landscape than we were looking at just very recently with the Fed. Let's go ahead and listen to Fed Chair Jerome Powell gave a little bit of a presser afterwards explaining their thinking. Let's take a listen to that.
I will begin with one overarching message. We at the Fed understand the hardship that high inflation is causing. We're strongly committed to bringing inflation back down, and we're moving expeditiously to do so. We have both the tools we need and the resolve that it will take to restore price stability on behalf of American families and businesses. The economy and the country have been through a lot over the past 2.5 years and have proved resilient. It is essential that we bring inflation down if we are to have a sustained period of strong labor market conditions that benefit all.
They are also projecting unemployment is likely to go up. They are projecting economic growth is set to slow. So the specifics here are officials projected 1.7% GDP growth this year and next. That's down from March projections, just from March, of 2.8% and 2.2% respectively. The unemployment rate projected by all but one official to rise over the next 2 years. And I mean, ultimately, when you are lifting the rates, that's basically their goal. I mean, that's the goal of this type of action.
I just wish they would be honest.
Right. That's the only thing that this is going to ultimately lead to is they want to make it so you have less money to spend, and that's their only tool for ultimately getting inflation under control. You're screwed either way.
I saw this elitist take on this. So just so you know, when the Fed raises interest rates, they're paying you to save. Oh yeah, I'm going to take my 0.75% increase. By the way, what are the savings interest rates right now? Like 0.05 or something like that?
Credit card debt is the highest it's ever been in history.
I'm going to take the interest on that, and then I'll spend it on my gas, which is up 25%. And we'll see so I've saved 24.5. Thank you, Fed. Congratulations. This has real implications for the housing market. Let's put this on the screen. We've been tracking this closely. The mortgage rate is now up to 6.3%, up from 5.5 just a week ago. Remember, as we said, that I forget the exact math, but every increase in a single percentage or so means that your mortgage rate your mortgage actual payment is double the next month. So as we continue to see this happen, 6.28% versus the 3 or so percent, which was just 6 months ago, versus the 1-something% that was a year ago, you are going to have a total freezing of the housing market. Just as this morning, the market hasn't opened yet, the Dow is down 600 points on the futures, and for the very first time, housing permits have collapsed in the month of May.
Yeah.
So that's the latest data that we have. And when I say collapsed, I mean one of the most precipitous drops we have seen in over 2.5 years, just looking at that data that just broke this morning. So why do you think that is? Who's going to build a house when the mortgage is at 6.3%? Now, you could say it's too hot. I completely agree. But there needs to be a level of balance. They're going to push us into a recession. Recessions mean that people die. There's no way to it's not just people lose their jobs. A lot of people kill themselves during depressions or recessions. A lot of people do not pursue healthcare that they actually need, life-changing surgery. A lot of people continue to work, which leads to stress, which leads to death. I mean, the after effects and follow-on that we saw. I mean, I personally think that one of the reasons we even had the opioid crisis is because of the Great Recession. There's a decent amount of data in order to link those two things.
No, that's right.
Yeah.
That is very, very true. No, just to give a little bit of math behind what you were saying, from that article, they say on a $400,000 home, which is now crazy to me, like actually less than the median house price, $400,000, with a 20% down payment, the monthly mortgage payment went from $1,400 at the start of January to basically $2,000 now.
Wow.
So effectively a $600 increase on your mortgage payment over the course of just a few months. That doesn't include homeowners insurance nor property taxes. Megan McArdle made an interesting point as well, which is that, people are going to be very reluctant also to sell their homes because they don't want to jump from let's say a 1.75% mortgage to a 6% one. Go ahead and put this tweet up on the screen. She writes, if mortgage rates stay high, one thing I expect we'll see is a collapse in willingness to sell homes. It would take a lot to get me to trade my 1.75% mortgage for a 6%er because, it makes a massive, massive difference over the long haul. And, I feel like we've been beating a dead horse with this, but it is so important and it's so central to people's lives because you have a president and a Congress and, two parties that are unwilling to act. The Fed is the only game. And part of how we ended up in this situation with high inflation to start with was because the Fed was the only game. I mean, their action during the coronavirus crash, pumping trillions of dollars into these markets, backstopping, inflating all of these bubbles. I mean, that was the start of how we ended up with inflation across the board. So they are, in fact, partly culpable for where we end up today. And certainly they're culpable both from their actions there and also during the 2008 recession for massively inflating inequality as well. And, we've got a lot of problems that are causing inflation. I think we should all be troubled by the fact, too, that what the Fed has already done hasn't worked because there's also no guarantee that these increases in rates are going to fully address the inflation issues that we even have because they're not, I mean, look, part of it was demand, but honestly, a lot of the demand part has already burned off.
It has burned off.
Credit card debt, sky high, savings way down. So a lot of that has already burned off. And yet that's the only lever that they're willing to pull. And that lever is the one that destroys you and your finances rather than dealing with, there's supply chain issue. We have a war in Ukraine that's causing massive price spikes as well. Not to say that's the only thing going on, but the Fed has nothing to do with the Ukraine war. The Fed has nothing to do with supply chain issues. Those all continue to go undealt with and unresolved. And you are unlikely to get inflation under control anytime soon.
I mean, look, even if you crash demand, let's say we crash demand, we induce a recession. I mean, people still need to drive. Yeah, some extra driving might come down, but the gas price is still probably going to remain above $4 a gallon. That's not a victory, in my opinion, right? If you look at the housing market, the same thing. You've slowed it down. You've basically frozen up the elite housing market. Well, number one, a lot of people who are very wealthy are still going to buy houses. Permanent capital, they don't care about a 6% mortgage rate if they can earn a 25% profit. So that only even continues to keep you frozen out of the game. Food. I mean, look, we've talked here endlessly. I've got a piece in my monologue about how natural gas markets in Europe are seizing up because the Russians are cutting off natural gas to both Germany and to Italy. That is going to drive fertilizer prices sky high. We are already watching a massive fertilizer crunch here in the US. That's going to continue to increase the amount of food. China is opening up to a big degree, transitioning away from COVID zero. Guess what? That means the demand for gas is going to go up. And China, currently, it seems all indications President Biden is actually going to lift tariffs on U.S. U.S. goods. That actually could conversely spike Chinese imports from the United States, which would only continue to drive up inflation. Everybody says you could save money. They don't consider that the demand of these products could increase. Soybean markets, agricultural markets. It's very likely, actually, that lifting Chinese tariffs will almost certainly increase the price of food here in the United States. So from the supply side problem, we have major issues which are not even being addressed. The White House press secretary asked the gas companies to be patriots and to lower the price of gas because that's how capital markets work. Congratulations. I just can't even, with them, they're so incompetent, foolish, impotent, just the picturesque of the worst possible people that you would want in charge of the prices.
I mean, here's the reality. Neither of these parties under a sort of Wall Street-centric, market-obsessed economic approach have any answers to this outside of the Fed taking a sledgehammer to your bank account. And so I think that's really where the handcuffs come in, is Biden's whole sort of economic orthodoxy, always positioning himself in the center of politics. This is what my monologue is on, and never wanting to stray outside, like color outside of the lines and get creative here. So yeah, if you're stuck in this like, oh, we just got to let the markets work themselves out mindset, then you believe, oh, what can we do? We can't really do anything. We can do these little things around the margin. Maybe we'll deal with the tariffs. Maybe we'll take the tariffs off, which I don't, even the people who are pushing that don't expect it to have much of a positive impact. So even at the best case scenario, let's say you're wrong about it fueling inflation, even the best case scenario, no one is saying this is going to have like a significant impact. Biden himself, they did this whole, let's go to Iowa, let's boost ethanol production, let's make the case that that's going to lower gas prices. Biden himself went back to the White House and was chewing out Ron Klain like, this is basically bullshit. I don't believe that this is going to have any impact whatsoever. Yeah. So they know that the things that they're doing are impotent. The best they can do is send a strongly worded letter to the oil and gas companies. Give me a break, and say to like the Fed, go do, we're not going to interfere, but go do your thing and basically, crush working class people and trigger a recession.
Yeah, but
that's all these parties really have to offer.
Listen, that ethanol thing especially pisses me off, because part of the reason that we have low refining capacity is because of conversion over to biofuel. So it's like these people really, at a very basic level, they don't understand what is going on.
And it's bad for the climate too, by the way. It's like incredibly—
It's horrific.
Yeah.
We don't, beyond that, it doesn't work in terms of emissions and in terms of what it even means in order to
Biden
farm all this stuff.
is correct that it's a bullshit policy.
It's not even correct. Yeah, it's a terrible policy, and it has been pushed for a long time by big interests, ag interests, far more than anything else.
Well, it's the fact that Iowa comes first in the presidential primaries. I mean, that's the whole reason we have that gigantic corn subsidy. So
cool. Yeah, I'm really glad that we have it so that we can all pay more for gas.
Cable news is ripping us apart, dividing the country, making it impossible to function as a society, and making it impossible to know just what is true and what is false. But the good news is they are failing and they know it.
That is why we're building something new, a new mainstream, a healthier one, something more trustworthy, something that we are going to need in one of the most pivotal times in American history. We are building up here for the midterms, for the upcoming presidential election, but we need your help. So if you can help us out by becoming a premium member today at breakingpoints.com, we're trying to change America for the better and the entire world.
So what are you waiting for, guys? Go to breakingpoints.com and sign up and help us build a new mainstream.